Today, we continue with interviews and panels at the recent Baltic Capital Markets Conference in Riga. I did not show you one very important interview, a joint presentation from Latvia's Altum and Lithuania's Ilte about a pre-IPO fund that has been established recently, and a final pan-Baltic panel, which, in my opinion, gave a very good summary of the state of Baltic capital markets. But my colleague Tarmo Virki will join me from Barcelona, where he traveled to discover newest and most innovative modern city trends in the world. For those who switch this show on for the first time, allow me to introduce myself. My name is Kristaps Petersons. I am very interested in Baltic region and its development. I believe that Estonia, Latvia and Lithuania, if working together on daily basis, could benefit more from exports, from investment deals and infrastructure objects such as Rail Baltica. I'm author and the producer of this show, which is called Median Report. You can find it on YouTube channel, Median Report, as well as on Spotify. Please share this episode if you feel you learned something new or your colleagues could benefit from it. Also, leave a comment, helping us to grow organically and learning from our mistakes. Although I'm a bit under the weather, as you can see, today it won't be an obstacle to tell the latest from the Baltic business world. For quite some time, I am following the saga of Teltonika high-tech hill project in Lithuania. Its founder, Arvydas Paukštis, have recently published several strong-worded opinion pieces and social media posts blaming Lithuania's bureaucratic apparatus to destroy the plans to open a semiconductor plant according to the technologies provided by Taiwan in 2027. It's a very energy-consuming project, and it faces different other practical obstacles, starting from, as I mentioned, bureaucratic paperwork to the rainwater collection on streets, educating and training specialists, etc. His public activities have gained some momentum, and several politicians and media outlets have reacted. The Minister of Economy and Innovation even posted on her social network that all of the territory planning necessary for the factory park in Vilnius is ready and can be started. It's nothing new that public servants and politicians preach investments on one hand and put on some obstacles on the other. Fitch Ratings agency has lowered Latvia's credit rating score to the A-, or from positive to stable. Mārtiņš Kazāks, the governor of the Central Bank of Latvia, has expressed his concerns and urged the government to make a to-do list for economic restart. For the past 2 years, the economy has been in stagnation and even showing some signs of recession. The latest numbers came in pretty negative. Tax collection were negative by 1.3% during the last 9 months, as well as the total number of people in Latvia has decreased by 15,000. Commercial banks and central bank has decreased their forecasts for the growth of the economy for Latvia this year and also the next year. There is something interesting going on in Estonia's real estate market. Being specific, 722 apartment ownership transactions in the secondary market were made in Tallinn during October, which is the best result since many years. Even the most skeptic experts admit that this is a promising sign for the recovery. One of the reasons, of course, is all-time low prices in neighborhoods such as Lasnamäe and Mustamäe. Another reason is lower interest rates and growing activity from banks. And according to experts, what is also playing a huge role, people are tired of postponing the decision. Those who follow Median Report have heard that Tallinn leads the initiative of modern urban areas and is considering to invest in upgrading several neighborhoods with innovations helping people and transport flows. Our author Tarmo Virki was visiting Barcelona Modern City Fair and shared some interviews with us.
For this week's episode, I traveled all the way to Barcelona to see where the cities of future are going, to see all the future electric vehicles, hydrogen delivery machines, and so on and so on and so on. As a first interview from Smart City Expo, Karoliina Orav from Estonian startup called Boxbox is interviewing Margot Roose, who is the vice mayor of Tallinn City. Let's see what they have to say.
And I'm the Deputy Mayor of City of Tallinn, and I'm in charge of entrepreneurship and innovation, which means that I'm always in a lookout for new solutions. And of course, Smart City Expo is the perfect place for scouting new solutions, new ideas, and also cooperation.
Really cool. It's your first time here?
No, it's my second time. I was here also 5 years ago, so now seeing what has happened in the last 5 years, and I think a lot of what I see is just improvement of what was started already back then.
What interesting have you seen here in this year?
Well, I see that digitalization is being taken to the next level, so I see a lot of digital twins in all kinds of shapes and sizes, and in addition to buildings, there are now digital twins about waste systems, cars.
What interesting Estonia, or especially Tallinn, brought here from your view?
Well, we are bringing here our innovation, of course, because we are quite active in testing solutions, both from Estonian companies but also from international. And therefore we are happy to share the experiences we have, our experimenting results, and also look for more. So I'm walking around talking about Test in Tallinn. Please come, we are open. We want to be your partner.
Yes.
And then hopefully also other cities will join in sharing in innovation a bit more, because all cities need it.
That's true, hopefully. Okay, that's really cool. One of my questions, like everything what I've seen in the show floor, what do you think, like how Tallinn, Vilnius, Riga will be in the next 10 years? Like what changes will be there?
Well, I think cities all and also in the Baltics are growing, and mobility is a problem already, and it's becoming more of a challenge, because more people means more movement, and our systems are still pretty much how they used to be, so there hasn't been a lot of radical change. So I think in the next 10 years, I hope that we will see a lot of mobility solutions, and we really need that, because otherwise there will be big traffic jams like bigger cities. So hopefully we can avoid that, and also I think people just expect other level of services, so we'll again have more digitalization. Everything is quicker, also city planning, also involving people, showing them if we do this, it will look like that. Also AI will be used a lot more.
I think that's really important part.
Yeah.
Okay, let's hope that we can see all these smart city things in Estonia as well.
Yes, I hope so.
And in the second interview I recorded at Barcelona at the Smart City Expo, I'm speaking with Sylvie Ching, a green tech entrepreneur who has decided to set up her business in Latvia, of all places. Why on earth? Let's find out.
So hi, I'm Sylvie Ching, the co-founder of Clear Karma, basically, which is a standards organization which is certifying positive impact. Creating standards for positive impact, and we have, so this is the NGO, and under the NGO we have also a couple of for-profits, and one of them, Clear CO2, is building certifications, certification platform, the whole process is even a registry to certify carbon credits. Okay. And we do that for small, mid-sized organizations. It's a bit long, but it's a complex topic.
We are here standing at the Estonian booth, but and looking at you, you are clearly not the original Baltic person.
Yeah. Yeah, of course, I look like I'm from Africa, yeah.
Yes.
Yes.
But your business actually has a strong link to Baltics, right?
Yes, so basically we've been already, this year I've been, for instance, presenting at Deep Tech Atelier in Riga, and actually more in Riga. I've been also at TechTrill this year. It was really a great event, yeah. And basically we were told by FinTech incubator that Baltics is actually quite developed for FinTech, of course, yeah, that Lithuania, Latvia and also Estonia are more digital, also making sure that anything that is looking like a FinTech company could be especially very well placed, and they try to attract more FinTechs. It's really clearly said, so that's why we were quite interested in knowing more.
Why Latvia? I've heard that Latvia is your number one location target at the moment.
Well, basically, we were really looking at the 3 different countries, yeah, and of course we're still evaluating, but what speaks for it is that, I already went to Estonia, I didn't go to Lithuania yet, but when we researched, we saw that they are very, let's say, very welcoming for green tech and for FinTech at the same time, and it's exactly the topic where we are. At least, it's a crossing of both. And also for me, because we have global ambitions, it means that I travel a lot. And for me, a kind of deal breaker, I need to be able to get out very fast of the country. Yeah. So I would, for me, it's important that any operations we put somewhere that we have a lot of flights. And actually that's one of the points where I said, okay, to make my life easier, I prefer to be in the hub of flights in Riga, which is for the Baltics.
So Air Baltic was the key differentiator between the 3 countries.
Yeah. I know some people just didn't believe it because, of course, they thought, okay, that's what the government says. Actually, it was really what made me think that's a plus point. That's an important plus point just for quality of life. It's stressful, to be an entrepreneur and travel a lot, and we don't want to be stuck somewhere, middle of the night and not being able to go home, or problems to get out in the morning.
Flight is delayed, and there is a bus trip 7 hours to home or something like that.
Yes,
right?
yes. We don't want that.
Of course.
That happens already, but let's limit.
Exactly.
It's not only me, it's other people in my organization which have the same problem.
Of course. But looking ahead, into the next year, what are the big milestones you will be aiming to reach?
So right now it's quite interesting. We have been pivoting because the developments about the credit carbon market are the wild west. Yeah, it's quite complex. Yeah, it's going up and down. Now right now it's down, but it will go up. We don't know when, but it's for sure it's going up. Yeah. So in between we have been testing other offerings, and we see that with cities we have a good following. We have cities who also want to support their local economy and local projects to get more carbon credit certifications. And usually the carbon credit certifications are more for large companies, larger projects. And there's a gap. There's for small and mid-sized organizations. They don't have the capacity, they don't have the people, they don't have the knowledge. It's not their core business. So it needs to be thought totally differently. And that's why we are building that for those companies, but also for cities which also have infrastructure projects, for instance. Yeah, drinking water production right now is our core topic. That we do that with a couple of cities, and especially when there's a crisis, it's exactly where drinking water plays a vital role. Yeah. Next comes, of course, energy.
Valencia. This week,
right? Exactly. Yeah. Anywhere where other floods due to climate change are happening, this is actually where we know that we have the most impact. So even if it's not straightforward, and even if it makes us fly around, you understand now, to go to places where the crisis is happening, we need to get there fast. So you understand why, yeah? And it could happen anywhere, and we need to get there.
Good. Thank you so much.
Thank you.
And now, as promised, we're going back to the Capital Markets Conference in Riga, which took place on November 7th. I had a wonderful opportunity to talk to none other than the managing partner of Tello Capital, Mr. Frank Oliver Lehmann. We discussed not only capital markets in Europe, but also the current state of German economy and the future predictions about the upcoming president of the United States and his policies.
Out of my CV, you know, I worked for the US Investment Bank for many years, and in the 90s, if you think about it, we were already thinking, how can we convert Europe into a common market like the US has, right? 400 million people living there, huge GDP. The GDP in Europe is about the same like the US, maybe a little bit less, but the fact that we don't have a common market is super negative for Europe. It holds us all back. And one of the advantages of the US is that if you're a big company and you go to the market and you have a good credit quality, you can print $5–10 billion in bonds immediately. In Europe, not possible because of the fragmentation and many other problems. So that's an absolutely necessary thing for Europe to achieve. And quite frankly, I do not know what's the hindrance. I look into it every now and then, but it's frustrating. It's very frustrating. Because we have a currency, right, that we could use. You know, if you go back in 1999, we still had 20 ex-currencies, right? So we managed to get the unified currency, but beyond the currency, we need to basically make it a harmonized market. Absolutely necessary. It's probably going to cost us a GDP of 0.5% or so every year. Someone said that recently, 0.5%. That sounds little, but if you think 0.5% of $15,000 billion, that could easily be 75–100 billion in lost GDP per year. When I created with some friends our company, Tello Capital, we did that based on the experience of more than 20–25 years working in capital markets. And we said we will never be the largest holder of cash or investable money. We will never be the largest employer of analysts, so we will not have 10–20 analysts. But what we want to do, we want to beat the indices, the credit indices in Europe, and we want to do this consistently, and the only way you can do that is through quality. So we have a much more condensed portfolio. Our number in our portfolio is about 40–50 names, not more. The indices all have between 100 and 400 names. And so we take a risk on a more concentrated portfolio, but therefore every name we have in the portfolio has to be super selected and super quality tested. And that's the reason why we come up with that, what you just mentioned, that due diligence list. And our due diligence is usually a pretty harsh one. We get involved before the issue, about 4–6 weeks before. And then we use the telephone and we use the meetings with the management. We go through that line by line. Typically, we do CV checks. So we look what the history of the management is. Have they been involved in corruption 20 years ago and stuff like that? We do all that. And there we find sometimes red flags. And then we go further down, we look at the financials. Actually, before we look at the financials, we look at the business model. We try to understand if it's a sustainable business model that's going to grow and going to throw off free cash flow in the future as a concept. And then we look at the individual lines of action. That's how we do it. And then we engage in conference calls and meetings. And
have you had an experience with a company from Malta?
Oh yeah, many. Yeah, it was actually very interesting because the businesses are highly competitive here, and if someone shows up as a bond issuer, he usually has had a certain competitive environment to grow into that position. And I guess a lot of companies have already been sorted out before they reach that stage. And there are certain strengths in the Baltics. One of them is definitely IT, so you guys are a super IT-driven area, countries. And consumer finance is something where you're really good at, and you know, banks, which I like actually. You have good entrepreneurs, people who are, like in the US, very dedicated to the companies, who are not eager to take out necessarily all the money immediately, right? But like to grow the businesses and look at the businesses as something where they long-term want to make money. We like that because we like to be aligned in the interests, right? We do not, but typically something we would not want to do is we would not want to lend money in a bond where the bond replaces bank finance. That's usually not, because that usually indicates that the banks have maybe indicated that they feel uncomfortable, want their money back. Okay, let's go somewhere else and find someone else who gives us money. That's typically not our role. We like to be either sole, alone, as a lender or as a bondholder, or we like to be in parallel to the banks, share collateral. So far, the last 2 years have been exceptionally going well in the bond market. For us, talking for us, we have since November 2022, which is about 2 years, we have accumulated 30% in bonds. We're super happy with that. That's a very, very happy performance for us. And that was possible because of the turn of the interest rate cycle and the growing of the GDP. So there's growth in Europe, but the interest cycle has gone in our favor. So you have a growing economy and you have falling interest rates, which is very rarely that happens. It's what they call the Goldilocks. And so in the Goldilocks, that's a good time to invest in bonds or in fixed income products. You still have to do the individual selection of the, but generally that has given us a lot of tailwinds. I would say the markets have been flooded with a lot of money because of that Goldilocks scenario. Well, Germany is about 25–28% GDP of the, I think, the Eurozone. Not growing. Well, you could argue 0.2%, but for me that's kind of like zero. That is unlikely to change. And on top we have two issues. One is definitely a issue in the auto industry, the automotive industry that is not selling enough cars, just by pure numbers. The Q3 numbers were minus 18% production of cars in Europe. You can assume that's the same for Germany. And that is really felt in the GDP, because if you don't manufacture cars, you know, there's just not a GDP produced. You don't see the unemployment, because the unemployment rate is still very low in Germany, because we have these short-term work solutions, etc., etc. So you will.
Nobody feels in the public yet.
Not on the pockets of the people. That's right, and that's why the consumer is still in a positive situation, but the industry itself is definitely suffering. And so the last economics research I read from a few banks, they have downgraded Germany for 2025 by between 0.3–0.5%. And if we are lucky, we get 0.8 in growth next year, real growth in Germany. It used to be more than 1.5. Now we're at 0.8. You can assume that with the dissolution of the government and more heckling around, this can take longer to solve. So it's not good for Europe, right? I wouldn't be too worried about the world debt. I would really look at it. And you know, when before the elections, about 4 weeks back, the 10-year US Treasury, the major funding source for the government, was at 360, and now it's 440. So it has already moved up 0.8%. Even when today the Federal Reserve will reduce the interest rates probably most likely by 0.25% this afternoon. So the Federal Reserve is effectively bringing the interest rates down on the front, but the long end is moving up, so you're getting a much steeper curve. And that steeper curve is actually the sign of good economic, vibrant activity. So that 2.5–3% for 2025 is already kind of finding its way into the interest rate curve. Now, is that 35,000 billion dollars of debt, is that sustainable or not? It's not sustainable, of course not. But is there an end coming soon? It can go on a few more years. It's not, there's no definite end to it, right? What you have to watch is basically a loss of trust. And if the loss of trust by the actors who buy these bonds, about I think 2/3 is held in the US, a third is held abroad. You know, if people kind of move away and find alternative assets, which is difficult because it's big size, very liquid, it's very attractive from the instruments. If people move away from that, then that would be a bad sign. But we're not observing that. We're not seeing that.
That can also depend on the policies of Trump.
Right. It's definitely Trump, but there was the Office of Budget Responsibility, the OBR. They said that Trump will, in his term, will increase the debt by another $5,000 billion. Unbelievable numbers, right? And Kamala Harris would do it at $3,500 billion. So none of them was really trying to keep that intact. There's one other thing you need to think about if you look at the debt. You need to look at debt to GDP. And if you look at that, you can see if the debt grows by 5-6%, and that's a nominal number, the GDP grows by 2.5 to 3, plus about 2.5 to 3 inflation, the debt to GDP ratio is not moving. It's not moving, it's staying exactly where it is. It stays where it is.
It's high, but it's still bearable.
Right, exactly. But you know, what really brought the Greeks and some other countries out of their main line of business, so to say, what really threw them off the line was the debt to GDP of 180 to 200%. We're far away from that, and there was, in the Greek finance crisis, there was no GDP growth left. We're looking at a very vibrant, very attractive place to invest, the US. As long as they are able to stay there and attract all the money in the world, there's very little questions about the sustainability of that.
But that's, again, bad news for Europe because...
Yeah, absolutely. It's a very bad news.
We
Right.
catch up.
Right. It's like a magnet. It's like a magnet, and the strength of the magnet through Trump has gone up. He will truly suck cash from the Near East, all the oil money. He will go to Asia, all the current account surpluses from the central banks, and he will look for savings in Europe to bring them into the US. There's no doubt about it. That's how it works.
We continue with the joint presentation by Ieva Jansone-Buka from Latvia's Altum and Dainius Vilčinskas from Lithuania's Ilte about the pre-acceleration program to companies heading to capital markets. Let's have a look.
Before we dig into details of the IPO fund, a little bit of statistics which contributes to why we are here today and what was behind the initiative. So bank loans to GDP in Baltics, so still probably the most popularly used way to finance companies' activities. So not the cheapest one in the Baltics, and also comes with a lot of leverage, so requirements. So what we do in Altum, we do support private equity funds that do private debt as well to also add some new players in the market, as well as doing a lot of direct loan activities, which has no collateral requirements or very low ones. So this is probably the slides that address the question why the IPO fund in the Baltics was necessary. And I was discussing with one young lady several days ago that we shouldn't go with the bad messages in the market anymore. So I will not go into this painful statistics in too more details, just by saying that this is really an opportunity. And last year, Minister of Finance was presenting a plan for capital market development in Latvia. So an IPO fund was one of the main topics on the list, and then the other one was moving state and municipal-owned companies to the market. So we are here today presenting the step number 1, so really hoping that next year we will be here presenting step number 2, and several of state-owned or municipal companies will be on the market. As in Lithuania and Estonia, around 1/3 of market capitalization regards to state-owned companies. Yes, regarding venture capital, so that is our one big activity that we are currently doing. And this year we committed additional 100 million euros to venture capital and private equity funds. That also includes 20 million from Latvia into an IPO fund. And we still have around 70 million euros new initiatives on the table, also together with Lithuanian and Estonian colleagues. And mainly as the idea here, and what we are discussing with Danius a lot also, that pan-Baltic activities, funds like this, we understand that 50 million will not solve the problem, but it's a good way to start, and it shows that we can cooperate and we can look at our markets as joint markets and not the separate ones. So that is the idea behind it. So, Danius.
Yes, thank you. So this idea to launch this facility was actually initiated by our dear friends from EBRD,
yeah,
and Nasdaq. So they are the true owners behind it, and we just try to implement it, and hopefully this will be a success. So what's the idea? The idea is to launch Baltic Capital Market Acceleration Fund, as we call it, or in simplified words, IPO fund. The aim is in total to deploy 100 million euros for the purpose of investing into companies that will go public. Would this be IPO or would this be IBO? Our stake in this facility jointly with Altum is almost 39 million euros. And actually on these days there is ongoing a selection tender for the manager of the fund. So the manager of the fund will have to attract additionally 10 million euros. So in total, the fund size should be almost 50 million euros. And the fund will have to find co-investors for each of the target investment. So in total, 50 million euros that will come from national promotional institutions like Altum Ilte, plus fund manager, and 50 from private investors. So 100 million euros should top up Baltic capital markets in addition to what we saw recently. So what's the target investments? So like I was saying, it's companies that are in a pre-IPO phase, companies that are in a IBO or IPO phase. So in other words, the fund is expected to invest into public equities or public debt instruments. We expect to see a bit less than 20 target investments in the fund. We expect that one ticket will be in the range of €500,000 to €5 million. And valuation of the target companies should be in between 5 to 100 million euros. So, as I said, the selection process is close to final stages, and I know that the teams most likely are in this room. So, good luck, and hopefully we'll be able soon to announce the winner. And this one facility that we are commenting and presenting with Ieva today is, I would say, not maybe the first attempt to cooperate and to do jointly something for the region. but in the future, as our markets are so small and so shallow, and still we are quite important investor and players in our markets, we'll try to do more of joint activities. And capital markets in Lithuania on ILTE side is one of our top priorities, and this is the visible expectation from our shareholder, which is Ministry of Finance. Our economies would clearly benefit if capital markets would be doing better. So we do various additional initiatives. So Ieva, maybe you can start with this description of what you do.
Yeah, we have one initiative not run by Altum directly, but it's also for capital market development. So we do a granting program. It's 2 million euros overall, and you can get compensated for the costs that you accumulate when moving towards IPO. So legal costs, consultancy costs, and it's maximum 200K for share listings and 120K for bond listings, and invite everyone to use it. It's really a grant program, and it's something similar that our Lithuanian colleagues, you are doing the same for your companies.
So we have this bond issue cost compensation program, exactly the same like Ieva described. Our allocated amount is a bit smaller. We have to admit that the traction is not very high, but there were several companies that benefited out of this program. We encourage others to apply and check. We have to say that real estate companies, sorry, those are not in our target. The real estate sector is functioning quite well and gets access to financing quite easily. This year we have launched one more interesting financial instrument. Hopefully this will help companies to go public with the borrowings. We provide 50% guarantee for each of the bond emission. So this instrument is targeting small and medium-sized companies, which are operational for more than 3 years. And we will guarantee 50% of the bond issue if it is not exceeding 5 million euros. So this is very fresh instrument, and we already have some 3 applications in the process being analyzed, and we have quite high interest. So anybody of you who are working with bond issues, or would you be advising, or would you be issuing yourself, please, you are welcome in Lithuania to come up and chat with us. Then, in addition to all of those instruments that we announced, like ILTE, on ILTE side, we will be very active as well ourselves as the company that will borrow. So next year, we will go out most likely with a public issue of our bonds, which will be securitized with a apartment renovation portfolio, and we are seeking in the first stage to attract at least 150 million euros. Total needed amount for us is up to €500 million. And most likely in the future, in 1 or 2 years' time, we will be issuing bonds like yourself in the case of Altum, just to fund our further activities in financing and helping Lithuanian economies and companies to develop and to grow for various areas. Would it be innovation? Would it be decarbonization, sustainable finance, and etc.?
Yeah, and just on a final note, so basically the idea when we started to do evaluation with ABRD was to put together money, knowledge of the fund managers that we will choose in the end. So that would be a great combo to put good companies on listing and on bond market for IPOs mainly, and the other part is to add a liquidity to the markets, which is also really necessary, and hopefully this will work, and please use as also opportunities that we have with other instruments, and that shows the willingness from both countries to contribute for our capital markets.
And to finalize our presentation, as the time is running, we're very open to discuss with the market participants the needs and what would actually help the capital markets to develop. We have some thoughts on our end as well in our plans, like underwriting possibility, so which we'll be analyzing and most likely coming up with some news from our side during 1 or 2 years' time.
And we are going to finish up with a final panel of the conference, which I will run here in full length, because this covered a wide range of topics, starting from different asset classes and their values in the market, up to the pension funds and their involvement in local growth. The panel is moderated by Roberts Idelsons, chairman of Signet Bank, and additionally is joined by Citadel's Kārlis Purgailis, whom you know from previous Medium Report episode, and Andrus Barstis, the partner of Capitalica Asset Management.
Maybe I'm going to be a bit provocative right from the start, because statistics shows that in Latvia we have only roughly 7% of second pillar pension fund assets invested domestically. So Kārlis, two questions to you. One is, how do you see a risk-return perspective of local asset classes in financial market? And second, what are the obstacles for second pillar pension funds to be more active in these segments in the Baltics?
Yeah, historically, I guess we've been one of the most active institutional investors in Baltic capital markets, especially on the public market side. And yeah, we do also, apart the pension products, specialized mutual investment funds focusing on Eastern European fixed income, where Baltics is quite substantial part of the fund. And in general, yeah, we see that the returns produced by local bonds are somewhat higher than compared to other regions. And yeah, the reason for that is that there is a certain liquidity premium priced in those instruments. Yeah, our two actively managed pension products have almost 20% allocation and exposure to Baltic market at the moment, and yeah, that's basically the ceiling that we can handle. But in general, we see that there's a huge disproportion of scale from the issuance side and the pension fund asset side. The bonds and the equity IPOs that we've seen here are very small for the pension managers, and it's quite hard to make efficient portfolio from multiple small issuances, and the portfolio gets very defragmented. Therefore, we've already for several years been looking at this market gap, and actually we are working on the product that could work as an aggregator of the funds for the institutional investors. We are trying to launch the fund, alternative investment fund, that would invest in small SME issuances in Baltics, and then the investors behind that fund would be pension funds, banks, and insurance companies, and hopefully that initiative goes out early next year, and we believe that together with Altum and Iltis IPO fund, that would be a quite substantial boost for the small issuances of bonds and even equities.
Yeah, interesting, great initiative. And when do you plan to launch this product?
Well, currently we're working on the legal framework of the product. There is some to-dos in-house, and actually we're waiting for regulatory change for the pension law in Latvia that would allow this fund to be treated as a bond exposure for pension funds. And hopefully that's passed through by the end of the year, and then we would be ready to launch it.
Okay, good. Thank you. So maybe to you, Frank Oliver, you are one of the few probably international institutional investors present in the local market. So maybe tell us what's pros and cons investing in the markets from international perspective.
Thank you, Robert. So first of all, we of course have the opportunity to put our money in different markets, and the Baltic market is one of them. So the point you just made about diversification is of course not something we faced with, because we play in the Euro high yield market, we play in the Nordic credit market, and in the Baltic market. For us, what we really have developed over the years is a very intense due diligence process, and we are looking for very defendable, top-notch managed companies. And then for us, because we have very patient capital, that's probably a difference to many others, we can also invest in smaller issues, because we're not necessarily confronted with the redemptions. And for us then, we're okay if the issues are small, but they are playing a part in the bigger scheme of our portfolio, where we have about 40, 50 names in there. And we rely very much on a long and tested due diligence process. We set up the fund about 8 years ago, and at that time I have been in the market myself, in capital markets, more than 20 years. So over the years you have seen a lot of defaults and different things happening, and you're getting nervous about certain industries, etc., etc. But what we're finding in the Baltics, we're finding the entrepreneurs. So I find that quite an interesting market. We're finding attractive yields. And as long as we overcome the issuing size, which sometimes is 10, 20 million only, which makes it a small issue on a European scale, we're okay with that. So we overcome that, we get compensated, but we have to be absolutely convinced about the credit story. And if we hear very good, convincing credit stories, we will work out something to invest. But it's not the other way around, right? Sometimes, of course, in the Baltics, you can also get double-digit returns of companies which we wouldn't touch. So we're really for the quality of the management, quality of the companies. That's our game.
Mm-hmm. And we've been talking today at this conference also about the settlement issues, and is that something you're sort of facing also?
Yes, we face that every time again and again, but then we work with the issuer and the banks associated with that, because we have our custodian is a bank in Munich in Germany. They run accounts on Euroclear and Clearstream, but there's a bridge, and I'm not so technical about it, but there's a bridge where we basically managed to settle out of the Nasdaq CSD into our Euroclear and Clearstream, and then we need to fulfill a few other requirements because we are BaFin registered, which is kind of the German regulator. We need to have a data source, and we need to have the data source from one data provider that has been pointed by the regulator to be the data source, the reliable data source in Germany. And once we have figured that out and done all this, which is a bit of a work, but that comes with our wish to invest, and we have people who help us on that. But it can be overcome. It's not an issue. Robert, if you want to talk about the Capital Market Union in Europe, that's where the hurdles are, right? This is where the problem is, and but right now we're helping ourselves, and for us it's not an issue. I can see a lot of big issuers, big investors who kind of have problems with that, so that's why they're staying away, right?
Okay, all right. Andrius, switching to real estate as an asset class, basically, I know you have started also investing in bonds recently, and launched the first product which is invested in local bonds. But maybe let's talk a little bit about real estate perspective, because your way to invest in real estate is basically to have alternative funds, which effectively also capital market instruments, which then in turn invest in real estate and deliver certain profits to the investors. So maybe tell us a little bit about how you see the market, real estate market, how you see the current and potential returns, and why do you think this type of investments is also attractive vis-a-vis Western European peers?
Thank you, Robert. Well, we do invest into already existing buildings, but also we can develop. And our largest development currently, probably well known in Riga, is a Verde project. And you know, when I was trying to enter this market, many people were saying that don't go please to Riga. There will be lots of heavy things, bureaucracy, etc., etc. In fact, I never had anything, any problem in that perspective, and I think there is kind of maybe a little bit too many rumors around what is the situation people are thinking and what is the real situation, and we clearly see the opportunity. And speaking about investment landscape here in the Baltics, we clearly see that we can earn much more money into these projects than in the western part of the world, because properties here are less, the values are much lower than in the western part. And it not only related with the real estate, but also with the equities on the stock exchange and other types of asset classes. So I think that if talking about Baltic markets, either it is real estate through funds or equities or other instruments, there is a lack of capital. And mostly we are talking about local capital, which mostly comes from the institution. These largest pension funds, they are great guys who are managing these, but majority decisions are coming from the Scandinavia. And there is not many incentive for these people to invest in local market. And I think this is probably should be somehow regulated, that at least part of the assets should be invested in the local market. And then we can get high values, high liquidity, better functional markets, better financing opportunities, and also local capital working for local people, for local business.
Mm-hmm. Yeah, this idea, I remember this idea comes up once in a while, that you know, it would be good to have this clause in local legislation forcing second pillar pension funds to invest certain part of assets in the country, but it contradicts European sort of union capital movement rules. So that's why I think it's, my personal opinion, it's quite unlikely, but maybe that's something we can take as a takeaway for discussions with legislators and with the regulators going forward. We actually have some questions here to Invega and Alte. So the question is why Estonia does not participate in this IPO fund?
Yeah, that's a good one. We were supposed to put additional like gray man in.
Everybody sort of expected it, yes.
Yeah, so the beginning of the talks was already like several years ago, and Estonians were participating and colleagues were there, but as the time passed, so Estonian capital market development, as we saw in the slides and we all know, went a bit further, and they somehow at the one point they lose the momentum of that this potential vehicle specifically would somehow help to boost their capital market. So it's not a lot of amount of money in terms of currently their capital market capitalization. So they decided to have different activities. But we nevertheless have other activities altogether. We all do invest in Baltic Innovation Fund, for example, together with European Investment Fund. We have Volume 1, 2, number 3 coming, and that is also a lot of money in there. Baltic Innovation Fund 3 is supposed to be around 200 million euros fund of funds. So we do initiatives with Estonia as well.
Okay, and then the question to Alte, or maybe it's to Altum, to both of you. When will Altum launch in Latvia a program similar to Alte's Rosberry, which has proven to decrease default rate on SME loans and operational burden on the fund? So is this Rosberry, is this something you've been talking about this guaranteeing part of the bond placements, or it's something different?
It's a guarantee program. So for we call financial intermediaries or banks and other credit institutions who are providing credits to small corporates. This instrument was effective from various angles. First of all, it improved access to small corporates to financing. And for banks and credit institutions, they got bigger comfort in providing those financing, because they knew that we're kind of sharing the risks with them. This on one and on the other hand, this instrument helped especially the small financial intermediaries to gain additional business volumes. And in addition to capital markets, one more of our interest or priorities is to help small banks and small alternative lenders to strengthen, to start building up a competition to large banks who are dominating all three countries. The composition of banking sector is very comparable. Several Scandinavian banks are dominating and dictating in general the rules, and make the entrance of other potential banks quite hectic for new guys. Yeah, so that instrument is quite a success. And if we speak about funds and asset management, today I think I can share one more news. And in Baltics, we don't see that such asset class as a private debt would be material. We have some attempts and some smaller funds who try to do it. We believe that this could create a good alternative for banks in general, and in addition, and could complement public debt with some private debt. And I know that some fund managers who want to launch private debt funds, of course, they will be investing into private debt as well as to balance their portfolio. So the news is that from Milta side, we are allocating 100 million euros, and we signed a deal with European Investment Fund. We grant them a mandate to do the selection of the funds on our behalf. So EIF is allocating for Baltics for private debt 100 million euros. We are allocating 100 million euros. So the challenging part will be for the teams to fundraise and to find the other 100 million euros, and I guess they will be coming to Karlis and other guys to fundraise for the rest. So this will be one more test for institutional local investors. Are they ready to support the alternative asset class in Baltics and help to emerge a new asset class, private debt, which is extremely sizable in US, which is very visible in more developed financial markets.
I hope you're leaving this podcast with more knowledge and wisdom. We most certainly recommend to subscribe to our YouTube channel for more focused business and economy news. Also topics and several interviews. My name is Kristaps Petersons, and I'll see you again here in the next Tuesday.